How does disability income insurance work? Disability insurance replaces a portion of your income if you become too sick or injured to work. When you purchase a DI policy, you pay a premium to an insurance company. In return, the insurance company agrees to pay the monthly amount outlined in your policy if you're too sick or injured to work. This is called your policy benefit. Your policy's definition of disability will determine if benefits are payable. In addition to your definition, your policy also has an elimination period and benefit period. They determine when benefits begin and how long they last. The elimination period is the length of time between the start of an injury or illness and when you start to receive benefit payments. The benefit period is the length of time a benefit is paid. Together, the definition of disability, elimination, and benefit periods determine when you receive your benefit. You're working hard to earn your income. Disability insurance can help you protect it.